Have you ever wondered what the value of your car, your house, or your motorcycle was? And how do these insurance companies think of the value? Are they just making it up as they go? Are they ripping you off? That's really the biggest concern. I recently had a question where somebody was asking, if I switch to company B from company A, are they going to cover my car the same? And that was a very good question because it's something not everybody knows. So we'll start with car, we'll go with house, and then we'll go with accessories or toys, so to speak. By the way, if you guys get some good information on this, don't forget to share it with your friends that you think might not know it, or subscribe if you want to learn more about the insurance world. We're making it awesome. First off, we're going to start with the value of your car. There's two parts. So there's actual cash value, and then there is replacement cost or agreed value. And really the agreed value, I'm not going to pin too much onto that because that's if you have more of a classic car, a 1959, whatever, right? And that car is today on paper, if you were to buy just the metal, it's actually probably worth a lot. It's, a good $20,000 or $8,000 to $10,000. Once it's fixed up in its original condition, it might have only cost somebody $5,000 to buy it brand new, but because of the value and the preciousness of it, I guess you could say, that thing's worth $40,000. So that's agreed value. It's where you go to a company and you both agree on a price. You will not find that in regular insurance because they just don't do it. That's something that's a classic thing only. The most common one is going to be the actual cash value, and that's where your car is worth what it is today. So if I bought a car a year ago and it was $10,000, today it might only be worth $8,000. So I get that depreciation. I'm not covered on my insurance for that $10,000 because of that depreciation. What that's going to do is the actual cash value is what they call at the time of the claim or the accident. So if my car got hit today, whatever that value is, if it gets hit in a year from now, whatever that value is, $7,000 at the time, then it's worth that much. However, you will notice that you won't get that full value because if you go online and you blue book it, your car is worth $18,000 if you were to buy it today, but they're only giving you $17,000. Where's that extra $1,000? What's going on? So they're very different from what you're looking up and what they're looking up. It's the same place. They're going to kellybluebook.com or kbb.com or nada.com, which is what most banks use, and they're looking up the value of your car, but they're not actually taking in consideration of the average value. That's what you're looking at. You're clicking all the features, but there's a lot of little nitpicks that insurances do. And this is where they're very specific. Because if they give everybody an extra $100 or short everybody an extra $100, they're going to get sued. And then that class action lawsuit could cost them, lawsuit could cost them $10 million in a few years. So they have to be very specific on what they're covering you for. So what they're doing is they're saying, okay, well, there's no remote start in this car from the VIN number. It tells you right off your VIN number. So there's no remote start on this car. The red model had an extra cost for the paint, so we're giving them extra money for that. The alloy rims were not the 18-inch rims, so we're going to deduct that. And then this, and that. When you have a claim like that, you can fight some of that. I had the exact same situation myself, where I ended up getting about $300 more because I had to fight that I had a remote start in the car. And it wasn't just a standard stock remote start. It was worth more than what the dealer would have put it in for. So we went back and forth a little bit, and they finally approved it and ended up getting that covered. So just keep in mind, you can fight stuff like that. It's very difficult to win because it's just kind of a back and forth with the adjuster. If they're really nice about it, then great. If they're not, there's not a whole lot you can do. You just have to accept what they give you. If you don't agree with the value, you can do some research on your own. Go to nada.com, find out the value, figure out all the accessories. Go to cartrader.com, I think it is, and they'll actually show you like used cars and that. Try to find one exactly the same as you had it, and just say, hey, I can't buy this car, the exact car that I had, for the price you're giving me. And if that's the case, then they may even bump it up. Sometimes they're a little lenient with that. The next part is your house value. This is very, very, very hard to calculate. You notice that some houses are a little bit overinsured because there's not really a specific. Most people don't want the evasion of privacy, but they want to have their house insured. And what I mean by that is they don't want to let someone in the door. They don't want a guy taking pictures of all their stuff. taking pictures of their walls, taking pictures of their heater, and that's actually a good thing because that actually can hurt you. I've had so many times where people got denied or were forced to fix something because they let them in the house and then they took photos of stuff that had to be changed, and then now you got to pay for it, you got to fix it. So why are they that not so specific is because, just like you said, you don't want to be invaded on your privacy. You don't want them knowing all the stuff you have, but yet you still want them to insure everything. So you're going to have a little bit of a cushion. So the average cost to build like a house in my area, which is Michigan, is about $150 to $180 per square foot, depending if it's like a brick house versus a wood framed house. They need to know like what your chimney is and what kind of siding you have on the house, because wood siding versus vinyl siding, huge difference in cost, huge difference in labor and paint and all that stuff. They want to know how many fireplaces you have. Do you have a jacuzzi tub? Do you have French doors, or do you just have standard doors? Do you have these thin doors like I have? Do you have these thick wood doors? They're not going to get that specific, but if you really want to get exact, if you can, you could sit down for an hour and go over it with your agent. They're not going to love it, but they're still going to do it for you. They want to make sure you're insured correctly. What they typically do is there's a default where the average house, and actually some programs can take the average house in your area and just assume. So it can say, well, this house is in this neighborhood. The average house that we've insured in this neighborhood is this. And then it'll pop up and you just say yes or edit, and I can kind of go in there and pick and choose different things. So I can tell you right now, if you have a 2,000 square foot house, you're probably going to need about $300,000 in my area. So that's the cost to rip it down and rebuild it. Now, if you have like a barn in the back and you want more than the 10% average, which is like $30,000 to replace the barn, but it's $50,000, those are things you can increase. So just make a mental note when you are doing insurance quotes that you know the value if you have anything that's above what you would expect to be a standard value. And it never hurts to ask just what you're getting covered for. The last part is toys, motorcycles, ATVs, all that stuff. Very similar to cars is it's optional. You can choose actual cash value or you can choose agreed upon cost. Honestly, I would say agreed value because more often than not, it's not much of a price difference. So you might as well have $16,000 on that brand new ATV that you bought versus having it depreciate in value. And if 4 years from now, they're still giving you that actual that agreed value and you have an accident, you get that $16,000. Now you can go buy a brand new one, exact model today off the shelf without having to lose some of that income. There are the little accessories, but they don't really nitpick on that stuff, so there's usually ranges. So it's $1,000 to $1,500 to $3,000 to $10,000. Once they get into a certain amount, there are triggers. So if you say, I got $10,000 in accessories on my bike, they're going to have an underwriter ask questions. They might want to see a picture of it. If it's a Harley, they want to see if it's chromed out. That's one thing. If it's got turbos on it, you can put turbos on a motorcycle. It's crazy. They want to know all that stuff. So if you get too crazy with it, they're going to ask questions because they want to make sure, one, do you actually have that stuff? Are you going to do a false claim? But two, is it worth what you're saying? Because there's a certain value. Once it goes over that range, I have to get approval to have that vehicle covered the same. Anyways, I hope that helps. Actual cash value, agreed value. Don't forget to like, subscribe. If you guys want to watch more videos, I've got tons of insurance stuff, home, auto, all that fun stuff. Wow, insurance. All right. I will see you guys in the next video.